Hi everyone, it's Tiana, the paid pretty investor, aka your Forex sniper queen, and I just want to go over with you how to do your top-down analysis when you're looking at US30, but not just US30, looking at all the pairs. I'm going to show you what I do. I trade a lot of different ways, but the majority of it is based on doing top-down analysis and bottom-up analysis. I trade again US30 and I trade German 30. Those are two of my favorite pairs. Although I've looked at other pairs and trade them here and there, those are predominantly the pairs I trade. But before we get into this analysis, let me first start off by saying that I am not a financial advisor. I am not a financial manager. So the things that I share with you are solely based on my opinion, my observations, and my analysis. So if you would like to try any of the things that I'm sharing with you, please do so in a demo account and do not utilize a live account. Again, please do so in a demo account. So without further ado, let's get started. So I want you to know that the market moves in the same directions every day, and those are three basic directions: up, down, and sideways. The sideways, most people refer to it as consolidation or accumulation. I use the words consolidation and accumulation interchangeably. So again, as I said, the market will move up like this, it moves down like this, or it moves sideways. So I drew that a little wrong, but here you go. And sideways like this. These two are the same. These two are the same. It's just in all how you look at it. Now, let me move this back over. As we look and as price goes up, when you're in an uptrend, it makes highs. The highs that it makes, it should always break structure. So for each high, structure should be broken going higher, right? When you're going down, for each low, structure should be broken going lower. Now, and understanding structure is breaking higher and structure is breaking lower, what I utilize the time frames for are differently. So the monthly, weekly, and daily I utilize to see the actual trend of the market to get a flow of my bias of overall what's going on. The 4 hour and the 1 hour, I look to see when the market is getting ready, where the money is, and then the 15-minute and below, I look for my entries. You can utilize all three time frames, the monthly, weekly, and the daily for your directional bias. Just keep in mind different time frames at certain points may be opposite of one another. I utilize and then you can utilize the 4 hour and 1 hour. You can utilize both or one, and then the 15-minute below, you can pick one. So for me personally, it just depends on where I utilize, whether I utilize the whole monthly, weekly, and daily, or just the daily. The whole, both 4 hour and 1 hour, or just the 1 hour. And then my entries are usually on the 15-minute or 1 minute, sometimes off the 15-second. My stop loss is usually off the 1 minute or the 5 minute. That's just me personally. Understanding the breaks though, in terms of in the directional bias, like I said, it will continue to break up. Now, there's also a breakup structure going in the opposite direction, which usually symbolizes a reversal. So we talked about price breaking up in the direction that we want to see, but if we're going in an uptrend and price comes down and break, that it symbolizes a reversal for price to keep going down, right? And then the same thing happens as it goes down. If it begins to break back up, that symbolizes a reversal or breakup structure that price is going up. Same thing happens over and over again in the market. Sometimes you will have a false breakup structure. I'm just going to show you what it is, but I'm not going to go over it today in a whole lot of detail, because like I said, that can take up a lot of time. So let me bring this over. So with a false breakup structure in an uptrend, you'll have price going up. You'll see what you think maybe is a breakup structure, because you'll think it broke right here, but really it's not a breakup structure. It's just the market being manipulated to gather money that is in the market. And then what you'll have is it'll continue to go in the direction that it was going to begin with. And a lot of people get out right here because they believe, oh, we have a breakup structure, the trend is changing. Well, actually the trend is not, as I said, the trend is not changing. Money is just being collected at that point in time in that area. So now that we understand a little bit more about the breakup structures, we understand the time frames between the monthly, weekly, and daily. And again, you're looking for the same thing on each of those time frames, monthly, weekly, and daily. I just want to put out there that when we're looking for those breakup structures, i.e. your higher highs or your lower lows, whatever the case may be, I'm going to type this out. On your monthly, weekly, and daily. Why is this not getting me? Okay. So on your monthly, weekly, and daily, when you have a breakup structure, it is usually 3 candles or more, right? So let me I'm just going to select the daily for this purpose of this, right? Where my little notes go? All the way over here. Okay. Oh, I put MWF. I meant monthly, weekly, and daily. Okay, so for our monthly, weekly, and daily, when we have those breakup structures, before we have a breakup structure, we're going to have a retracement, a flag. Those are just names people utilize for them. And I'll start right here. Right here. This is the retracement before the breakup structure. This is a retracement before a breakup structure. This is a retracement before a breakup structure. Retracement. And true, he said I can bring this one to over here. This whole thing is a retracement. This is a retracement before a breakup structure. So right here we have a we have these areas which price is pulling back to send us forward in a continuation, which is a continued of the pattern of the trend, if you will. So right here we want to see 3 candles to break above. Generally, you want to look on your time frame. On your time frame that you're looking at your directional bias on, that is the time frame that you want to see 3 or more candles to symbolize is really a breakup structure. So for here, I'm just going to start with this one right here. I'm not going to go all the way back. But for here, let me change this to make this a little better. Right here, we have a breakup structure. How do we know? Because these candles are higher. And do we have 1, 2, 3? We have more than 3 candles. Look at all these candles from here, right? And then we begin a retracement right here, all the way down here. But this is the highest point. At this highest point, we have more than 3 candles above. Now we're looking here at this highest point. At some point when this breaks, there'll be more than 3 candles above. A price decides to break below here. Let's say we have a break to the low, because we know we operate on probabilities. We don't really have any control in the market. If price breaks below here, it'll be more than 3 candles. So essentially you can have price break above more than 3 candles, it's telling you is going up. Price break more than 3 candles is telling you, you know, you may want to reevaluate. We may be turning around in the trend, right? So again, that's what our monthly, weekly, and daily is for. Our monthly, weekly, and daily is for our observation of the trend. And I'm going to just put your trend or your directional bias. All right, now as we go to the lower time frames, the 4 hour and the 1 hour, and maybe I should number these just so give you a little bit more clarification. The 4 hour and the 1 hour, we're looking for the money in the market. Right, and I'm gonna just go ahead and put what we're looking for on the 15-minute and below while I have it open. Okay, so the money in the market, how do we locate where the money is in the market? This is one way to locate the money that I'm going to show you now. Money usually resides around the wicks of the market, around the consolidated areas of the market. That's where I like to personally get in my trades. So we have, I'm not going to do all of them, but I'm just going to highlight some areas that you can pay attention to. And you'll have a lot of areas here and there, but I'm just going to do these couple just for time's sake, so we'll know what areas we want to look at. Again, you'll see, and the further you go down in your time frames, you'll see more and more. All right, that's all I'm just going to do for this area. So on this 4 hour, we have multiple areas where money is potentially sitting, and these areas also serve as areas where we could possibly enter the market on a lower time frame, not on this time frame, but actually on a lower time frame. So on this time frame, how do we discover where the money actually is taken off the table? Is price will go through it. So this box right here, and it's just not a box, it's just basically an area. We have price surpassed through here. So the money above that was sitting here at some point or resting above here has been taken, but the money below is still sitting here. In this box, the money below has been taken because we see price came down all the way over here. So that money is gone. And as we look at the top, this money is gone as well because price has come through here. Right here, this third box, price came through here, took the money from below, and then at the top of it, it took the money from the top because we see price went above here. Right here, this price went below here, which means that money was taken, and price over here surpassed that area, so that money was taken. Right here, price has gone below, so that money is taken. Price has gone above, that money was taken. Right here, price has gone below, that money is taken, but price has yet to come above. So that money is still on the table. Right here, price has gone below, so that money is taken, and price has not gone above. So we have two areas where price will potentially take out money. It doesn't say guarantee that price will go that way. However, in terms of probability, it's very probable that price will go that way. So as I look and understand where my money is, where the areas that are of interest to me, I now understand that, okay, where can I enter in these markets now? Because if you, I'm going to just show you on the 1 hour. If you look at these time frames where we have highlighted, depending on the direction that you're going in, these are entries. Look, let me take it to the 15 minutes just to show you clear. Just look at these boxes right here. Look, you got an entry off this box. Right here, you got an entry off here. Right here, you got another, this is another entry within here. I mean, it looks different because of the time frames. You're on a lower time frame, so it looks kind of like with a lot of information, but those are still entries. So the next thing is understanding about the entries. How do we find an entry? Well, they're up there. In addition to the three things, or the big three things I wrote down earlier, we also have to find out is how was the money taken out, right? And how was the money taken out is based on how did price come into that area. Because on 1 hour and the 4 hour, we're looking for the money to be taken. So how was it taken when we get down to the 15-minute? That gives us more information into how we may be entering a trade. And basically, we want to see, was price breaking structure in the direction of the trend, or was price breaking in the opposite direction of the trend, right? Was price impulsive when it came to a specific area, or was their price teeter-totter, come down slowly? All of that is of interest when you're looking to get into a trade. So I'm gonna just go over here, like I said, because this played out right here. And it's easier to see. I don't have to kind of like look. So right here, we're making higher highs, right? That's the direction of the daily. That's what we want to go. Down here, we see price starting to make lows, right? It's starting to make lower lows. From here to here, there's a low, there's a low, there's a low. But look, right here, there is a breakup structure. And I told you, when you have a break, you'll have multiple candles, at least 3. Well, right here, we have multiple candles above. Look at all these candles above that. So that tells us, yes, I'm in the right direction. Price is going up. Like if I look at this 15-minute, price is going up here. So if price is going up, where can I enter? Well, there are multiple ways you can enter this, but for this time frame, I'm going to show you one. Now, I'm going to draw this line here so we can see where price actually broke, and I'll do it in a different color. But when price breaks here, I understand there should be a retest of this area. Price should come back into this area that it broke. Like, I don't know why it does that. It just doesn't. It happens again over and over and over again. If I want to go down to the 15-minute, let's see, this is the 9th. Sorry, not the 15-minute, I meant the 5-minute. Just see if I can scroll left. Let me get the date on that again. Okay, the date on this is August 9th. Okay. I'm gonna start at 15 and go to the 5, just so you can see it. All right, this is where we're on the 15-minute and going to the 5-minute. Okay, on the 5-minute, this is the line we drew. Price came down here, but look here. When we drew this line, because this retracement started happening, right? If we draw this line, look here. We have 1, 2, 3. This is not that much momentum. I like to see more momentum than that. We have 3 candles that came above this, right? And when I see these 3 candles coming below, at minimum 3, I'm saying, you can have multiple, more than that, but at minimum 3, generally there's going to be some sort of consolidation, which you have right here. And inside of this consolidation, right, you can look at the candle that started the whole move. For instance, this candle within here, that was your entry candle. So in showing you, this would be where I would have entered when price came back here. Price will come back into this. Let me show it to you one more again on, let's just see if we could do it on a 3 minute. Because even on a 3 minute, you should be able to see this. It should give you a better entry. Sometimes it will, sometimes it won't. Let's look on a 3 minute. Price broke down. We know we're looking for price to start to break back up above it. Minimum 3 candles. Right? And this just gives you a better idea of consolidation. What does that consolidation mean? Well, actually, this is a wick entry on the higher time frame. I'm going to highlight it to show it to you so you can see it. On a higher time frame, this is definitely a wick entry. And the reason why I know is because I generally that's why they call me the sniper queen, because my entries, I usually get wick entries. Each time you get a wick entry, it's consolidation. That consolidation is a wick. So here we go. Let me take you to the 15 minute. Look at that, a beautiful wick. You got in on this wick right here. Beautiful. You could have even got in on this one. The same thing happens over and over again every day, what I just showed you. So in recapping, let's recap everything that we just went over. We're utilizing, and I'm trying to find my little words that I typed so I can go over that too. But we're utilizing the monthly, weekly, and daily for our directional bias. And with that monthly, weekly, and daily, we're looking for a breaks of structure in the direction that we're trying to go. If we have a break of structure in the opposite of the direction that we're trying to go, there are either 2 reasons. Either we're getting ready for a reversal of the trend, or we have a false break of structure. Those are the 2 things that could happen. On the second thing we're looking for, on the 4 hour and the 1 hour, or the 4 hour and the 1 hour, either way, whether you're doing one or both, we're looking for where the money in the market is. The money in the market tells us how we could proceed with higher probability. Trading is a probabilities game, so that's all we're looking for, the higher probability. And then when we get to the 3 minute or below, we're looking for our entries. And our entries can be said to be around those same areas that money has been collected around in the market. We are taking it back though to step 1, whereas we're looking to see a break of structure in the direction that we want to go. And once we have the break of structure in the direction that we want to go, then we can enter again. So that's all you need to do with your top-down analysis. Just keep in mind, as I said earlier, look up a time frame, look down a time frame before you enter your trades. But please like, share, and subscribe to future videos. And you all have a blessed week. Happy trading. Stay safe in those trading streets.